A lot of the students also want to know more specifically how you determine your buy points. And I'd love to just go through a few different examples and discuss exactly how you find that spot, that level that you're looking to enter a new position.
Great. Here we go. Let's take a look at Modine, MOD. Let's look at it together. Okay. And after a while, you're going to see certain points are repetitive, and that's good because they're appearing time after time after time. And in fact, let me just stare at this chart there because I think since we're being repetitious, we can get so many things across. Go to the very left for a minute, the left part of the chart there, Richard, all the way back, way, way back. Look how it came out of the base. Boom, look at that giant volume. Look at the stage 2 move. It was a thing of beauty there. And look at how it rocked and rolled. Now follow it because we're taking this time. And I love that to take this time with all the students there because it's one thing to write words, to write a book. It's another thing when you can really interface with people. That's why I used to love when I was on the seminar circle, which I promised my wife read long ago, no more. Again, there's a word in Yiddish, genug, enough, no more of that. But this is a way of getting across to them. So let them feel it again. Look, and you show it to them, Richard, how after the beautiful run, how in the May, June, July period of 2021, let them feel, okay? And you feel it there, how you moved into stage 3 and how you had, look at that low, first you had that great top, then you broke below the 50-day MA, you had a failing rally, much lower peak, then you had a third lower peak. This was textbooky. Look at how the market didn't just whisper in our ear, but he yelled at us, I'm topping out, 3 lower tops, breaking 50-day MA. I mean, how clear could it be? So now, again, don't worry if it's a 3 or a 3B. A trade is out of here, an investor's reducing. And then once now show them where you then broke with a downside gap. Show that gap there in August. Boom, you had the gap and now it's the converse. You had that tremendous volume when it broke out into stage 2. Now look at the big increase in volume on the gap as it's going from stage 3 into stage 4. Boom. Again, I don't care if they short or not, but this is what I want to get across today. If you just can identify where you would have bought it and it was good, where you would reduce, not so good, where you get the heck out, it's bad. We've already come so far, and don't worry if it's a 3B, a 3A, a 4B, just know it's bad. And now, once you see, we spoke before, this is why I want to be repetitious. When you see gaps, they're important. And here we had that downside gap. A gap on the upside, power. Boom, good. A gap on the downside is power the wrong way, bad. And again, look at the volume. Okay, so now you know it's a bad deal and it breaks both long-term moving averages. And not surprisingly, boom, the stock goes to heck in a handbasket. And look at it, all the way it went down. Whoa, whoa, whoa. Follow it for them, Richard. All the way down into that bottom there. I guess it probably May, June period. But now here we go. Now we want to see how it migrates from the 4B to the 4B minus to the 1A. So look, and let's get the feel, all of us together. Look at how, again, first you got that absolute low, which I'm guessing was probably about an 8. Go to the absolute low. No, not there. I'm sorry, my bad. The first time, go a little to the left. The first absolute, in April. Boom, you make a low. Okay, get a little rally. Now look at the next new low, Richard. Again, and this is another thing that most people don't know when they're looking at charts. And again, if I can get this across to all of you, we've done such an important thing. When you get a false breakdown like this, especially deep into the move, when you're already 4B, that's worrisome. Now it's a false breakdown on the downside. You start to move back above the breakout level. That's a warning. The stock is starting to go from a 4B to soon be a 4B minus. Then look how you break above the 50-day MA. It's definitely a 4B minus. Oh, this one didn't give us much time. It went from 4B minus, it went into 1A again, gap. Look how important the gap was. You had that big gap. Oh, and Richard, show them the volume there as a gap. Again, look at how each of those moves started upside and downside. All three moves we've just shown them with power of volume. I always say volume shows there's a tiger in the tank. Boom. And then take a look. Officially, it became a buy when it went above the 150 and 200-day moving averages. Show them right there. Yeah, you got it where it broke out there. And now for the trader, they move right in. But the investor wants to move in increments. So he puts them on, he or she puts them on and show them how you had the nice little rally up. And now this is what I love, Richard. Now trace the correction and see how the first one down holds. I assume that's probably the 150. Then you get a bounce. I don't know if it was the 150 or 200, but I held it.
It's a 200 actually.
Okay, held it 200, good. I'm colorblind. Then you get another bounce, and then boom, you for a nanosecond, you break below the 200, but it holds above the 150, and the rest is history. Look at how quickly thereafter, it never even took a breath after that. That gave you a second buy point, right, which was right near where the initial buy point was. It was right near the 200-day moving average. Boom, the rest is history. And now let's migrate. We've had a heck of a move. And again, I want to be repetitive because there are certain points I want to get across that you can't stress too strongly. Show them, Richard, where it made the high there on the recent run. Go right up to the high. Great. Now, again, we're talking about what we did before about traders getting a feel of something being extended. While it wasn't as ridiculously extended as the FSLR, it was extended. You're not only well above, look at how far you're above the 150 or 200, but even at that point, pretty much above the 50-day. Fine. So you take some off, but now what's interesting, look how it's correcting. And now this is going to be important. If an investor is playing the game right, he had his initial stop, which we spoke before, way down there, under the long-term moving averages. Now for at least, and you don't have to have just one stop, at least one of the stops. I like a 50-50. If a trader, this is going to be the whole game. For an investor, at least stop number one, you can use more than one stop, should now be placed beneath the recent low, which was 3 days ago. You give me, what was that low? 1441. And that would also be below the 150. So give it a little room. The market, give it a room, say 1430. So at under the round number 1430, 1429, I would want to place a trading stop. And if it hits it intraday, lose some. If it closes, traders should lose all of it. And then investors should cut it. Boom. I think this has now served a purpose of showing where we did the buy, where we raised the stop, the whole thing.